Well, good morning, good afternoon, good evening, and thanks for everybody for holding on there while we fix some small technical issues, but we are absolutely ready to go. I want to thank everybody for joining us for the webinar. We're going to kind of fly through the beginning here, some quick reminders. We have an agenda. We'll go through housekeeping. Julio de la Costa and Carrie Peterson are here. We're going to talk through a lot of great issues, talk through the timeline and critical dates that many of you are familiar with. Julio will walk us through some of the disclosure considerations for your 2018 10K and 10Q reportings. We'll do some demo, some additional disclosure considerations, and then we're going to take you through our disclosure reports, but most importantly, the validation reports, and wrap up with some key takeaways. Carrie, next slide. As always, quick reminders that we are recording this webinar, so feel free to go to the website and download it. Ask questions throughout the session. We will answer them to the best of our ability as we go through that. And a reminder to try and ask questions around the can you do something, or what are your thoughts about, as opposed to detailed configuration issues. We won't be covering those. We can follow up with you there. Next slide, please. Again, as I reminded you, you can download both from our home site here as well as from the Resource Center. So go ahead and do that. There are a ton of different webinars available to you on a variety of subjects, particularly in the CLM space. And I think you'll find them very informative as you go through your journey. Next slide. And a reminder to contact us, please go to bramasol.com, Facebook, and LinkedIn. Next slide. So while I'll kick this off, I'm going to turn it over to Julio in a second. Remind everybody, Julio de la Costa is our Director of Technical Accounting. He's been with us for over a year, and before that was the controller of a Fortune 500 oil and gas services company, and we are extremely pleased to have Julio here as an expert in this area. He has talked to dozens of customers, ranging from small customers to the largest companies in the world, including ExxonMobil, Walmart, and others, and has given advice and support to them. Also on the line, I have Carrie Peterson, who is our Senior Solutions Engineer and our resident expert on CLM, and has done, Carrie, I guess, dozens of demos and presentations to customers. So with that, I'm going to forego my chat and hand it over to the two of you. So Julio, why don't you take it away?
Hi, John. Good morning, good afternoon, good evening. So just to add one more point, so John, when I was in industry, I actually took my company through the lease accounting journey. So this slide is very familiar to me. So what are we talking about here? We're in January 2019, and I wanted to throw this slide up again just to remind the audience of, where are you in your lease accounting journey? If you're a public company and you have a 331 Q1 filing to do, let's hope you're in between stage 4 and stage 5, because hopefully you're not in stage 1. So this accounting journey slide is a very important slide because, for the past couple of years, you would have already understood your current state of lease accounting activities. You would have identified your changes, your gaps in your processes. You would have already designed your solution for your accounting change, for your lease accounting. And you probably just about implemented your new accounting policies, your new processes, your controls, and your software if you're using a software. The last step is what are you now going to tell your readers of your financial statements in Q1? So we know that the first phase, the first reporting transition was as of December 15, 2018. With the first coming out will be your SAB 74. And then you will tell your readers how you actually adopted the process in Q1. So hopefully everybody on in the call today is between 4 and hopefully 5, which you've already transitioned to. Next slide. So just a quick recap. For public companies, it would have been adopted after December 15, 2018. That means for most companies, as of 1/1/19, you would have technically adopted ASC 842. And from there on, you would do your sub 74 for your 10K 2018. And in 2019, your first quarter results, you will include the transition footnote that we're going to talk about today. Next slide. So what have we learned from revenue recognition? You know, a lot of companies, they don't think about disclosures until now. And that could be something that we don't advise against, because as you do your lease accounting adoption process, disclosure should be your first thing you should think about. And you walk backwards from there, because we have to ask ourselves, what are we actually going to disclose to our readers of our financials? So as with revenue recognition, qualitative disclosures under the NISA standard are extensive. They require a lot of technical analysis and a deep understanding of your quantitative models. So as with RevRec, we have a qualitative as well as a quantitative effort. And just to avoid last-minute fire drills, companies should make an active effort to understand disclosure requirements early in the implementation platform. What is important is ideally, as you select your technology vendor, you should understand what implications of that are. John, I wanted to bring you into this conversation. Could you give a little more insight on technology vendors?
Yeah, sure, Julio. From that perspective of technology vendors, what we need to think about is really a number of different issues. Number one is thinking very clearly about the technology vendor who can support you in your platform from an integration perspective and from a process perspective. So being very clear about who can do that. Think about technology vendor when you think of standalone third-party solutions. Be careful to talk about, think about integration. Are they truly integrated with the solution that you have today? A lot of times we hear companies talk about how easy it is to integrate and that they have existing APIs, but the truth of the matter is often companies will customize or change a lot of what they do, and the APIs aren't standard. They don't necessarily work. When you use an integrated solution such as what SAP offers in RAR or in the case of CLM, it gives you that full integration that you have, and you can rely singly on that tool. Secondly, it gives you single source of truth. So think about that from a technology perspective. Julio?
Yes, next slide, please. Thank you, John. So we're going to talk about, very briefly, your 10K considerations as well as your first quarter considerations for disclosure reporting. Next slide. So just as a quick recap, for public companies, for 10K, the deadline is for 60 days after the year end. So coming up very shortly, by the end of February, we should have disclosed our 10K. And next slide. So we broke this up into two areas. What should you disclose before you adopt the standard, which is going to be your 10K disclosures, and then what should you disclose after you adopt the standard, which will be in your Q1 disclosures. As we all know, SAB 74 should not be any news to anyone on the call, but the SAB 74, you really have to give your readers of your financials, how have you implemented or how you plan to implement the new accounting standard, whether it be RevRec or lease accounting. In several speeches, the SEC has made very clear that they are looking for increasing levels of detail from your disclosures as the effective date approaches. This accounts for all new standards, revenue recognition, leases, credit losses, as we're all talking about. Next slide. So with that, I wanted to give a quick example of Target. Target, one of the largest retailers in the world, and essentially for their 10K, they have disclosed a quantitative estimate. So you have a choice on the SAB 74. The SEC would really like to see a quantitative estimate, but for Target stores, they have already said, even before adoption, that they will basically capitalize 1.3 billion, billion with a B, and 1.4 billion respectively as of February 4th. So this is very important because the SEC has said in many times that they not only want you to describe the process of your adoption, but they want to give you they want you to give them an estimate of how much you will capitalize as far as leasing. Next slide. And then we have another large healthcare company, Tenet Healthcare. So basically, in this situation, they have not given an estimate of how much they will capitalize. What they are saying is that they're currently evaluating the potential impact of the guidance. What is probably going on behind closed doors is they have not done their full capitalization impact yet, but I'm pretty sure they are working on it. So you have two choices when it comes to SAB 74. Ideally, you would want to give a quantitative estimate like Target did, but then you can also get around it by saying, you started your project, you're still evaluating. So by the time Q1 comes around, you would have told the reader what you actually capitalized. Next slide. So now we go into the second phase of our disclosure requirements. So the question really is, once you adopt the standard, what do I need to disclose? Well, there's two fronts of disclosure requirements. There's the qualitative disclosures. So I have to give my readers of my financial statements a description of the leases, the terms and conditions, the exceptions, the conditions to extend or terminate leases, whether they have any residual value guarantees and how you accounted for those. And then you have to talk about the information about leases that have not yet commenced. Next slide. Also too, very importantly, because we see just from RevRec, whenever there's significant judgments involved, so the adoption of 842 as well as RevRec 606, these are principle-based accounting rules. So as opposed to the previous standards where it was more prescriptive, these are giving you judgments, significant judgments are involved. And what we see is the SEC has been really questioning the significant judgments. So we have to give the reader some information about whether a contract contains an embedded lease. So embedded lease analysis is probably one of the most critical areas because, as we all know, for leasing, this is a completeness exercise. We have to make sure that we've accounted for all leases, written, embedded, and potential and not. Also too, just like from 606, we have to consider what is the standalone selling price. Are we going to bifurcate lease and non-lease components? If you have a base contract of $500 a month, but then you also have maintenance or CAM or taxes or all these different non-base payment related, we have to make an accounting election whether we are going to combine or not combine. And we have to give the reader of your financials how you came about with that bifurcation process. Lastly, we have to talk about the discount rate for the leases. So we know that the FASB guidance says that you have to bifurcate based on three considerations. The first is the lease term. I'm going to probably have a different IBR for a 3-year lease versus a 30-year lease. The next is the asset class. Obviously, I'm going to have a different IBR for vehicles as different from a building. And lastly, and this is sort of a nuance that the standard talks about, is we have to bifurcate IBRs based on economic environment. So we have an IBR for North America, which would probably be different for Latin America or Asia or China, for instance, or Argentina, where there's hyperinflation. So you basically have to bifurcate based on the economic environment of where you do business as a company. Next slide. Now we go into the crux of the disclosure requirements, which is basically also to what lease transactions do I have between my related parties? How does my accounting policies look like? Have I taken the short-term lease exemption? So basically, as we see, even though you have a 12-month lease on paper, if you have an evergreen lease and you've been renewing it for the last 10 years, maybe you don't have a short-term lease, maybe you have a 10-year lease. That's some of the technical accounting analyses you actually have to do. Then there's an accounting policy election, a practical expedient, which says that instead of bifurcating your lease and non-lease components, you can decide not to bifurcate. That's a practical expedient that is open to everyone. What we see in practice, all our customers thus far have taken that practical expedient. Why? Because you have to, if you don't take a practical expedient, you basically have to bifurcate on standalone selling price. And that can be difficult in some circumstances. Then we have what we call the group of 3 practical expedients, which is the hindsight practical expedient, which basically means that I am taking all the elections that I have as of today and making the decisions on whether I have a 5-year lease or 10-year lease as of today. And then you have a modified retrospective election where instead of going back 2 years for reporting purposes, I can start my reporting under 842 on 1119. That was done last year because what companies were concerned about was, as we know, most companies under modified retrospective would have had to restate their 2-year look-back period. With the new practical expedient, companies have been given a break and they say, okay, I'm going to do 840 until 12/31/2018. And on 1119, I adopt the standard on a forward-looking basis. All our customers thus far have chosen that practical expedient. In fact, all our customers thus far have chosen all the practical expedients available because a lot of our customers have been suffering from RevRec hangover. So they have taken all the benefits that the FASB has given them to have an easier transition from 840 to 842. Next slide. Now we go into what I call the most important part of the disclosure requirements, which is the quantitative disclosures. From the FASB directly, we have to disclose your finance lease cost segregated by amortization and interest, because we know for finance leases, there are 2 components on your income statement, amortization and interest on the lease liabilities. The second part, if you have operating leases, you will disclose your operating lease cost. The next part is short-term lease cost. Now, even though you do not have to capitalize short-term leases, you still have to disclose it. So in your transition project, you would have to find a way to capture short-term leases. Then we have things such as variable lease cost, which you have to disclose. So a variable lease cost is, given an example, if I am leasing a copy machine and I'm paying every month on usage, so I do 1,000 pages, I pay 1 cent times 1,000, that's my variable lease cost. I have to now bifurcate that and include that in my disclosure. Then on the income statement piece, the last piece is the sublease income. If I have a building and I'm subleasing, I have to disclose any income I've derived as a subless or situation. Next slide. Now we're going to continue along with our quantitative disclosures. The 2 pieces there, you have to disclose your net gain or loss recognized if you have any sale or leaseback transactions. A lot of companies we found do not have those, so you don't have to worry about those. But the next line is critical importance, which is your cash paid. So basically, in your cash flow, you have to disclose what are the cash paid for amounts included in the measurement of your leases. We have to segregate those by operating and financing cash flows. Then we have to now disclose supplemental non-cash information arising if we have any exchanges of assets between REU and lease liability. The last 2 is what I consider to be very important. Now, the FASB has required, which is a new requirement in your quantitative analysis, the weighted average remaining lease term. What does that mean? That means that if I have a portfolio of buildings, cars, copy machines, I have to present a weighted average calculation of the remaining lease term of my lease portfolios. The next line item requirement is also a new requirement. We talked about the IBR, incremental borrowing rate. We have to now give a weighted average discount rate of my portfolio of lease assets, which is a new requirement. Next slide. Lastly, this one will not look too different from your 840. So currently, in your commitments and contingencies footnote, you are currently disclosing a maturity analysis of your leases. This has been transitioned from 840 to 842 as well. So we will now disclose, just like we did in 840, reconciliation of discounted cash flows to the finance and operating lease liabilities recognized in your statement of financial position or your balance sheet. Next slide. So this example is the FASB's example. It's coming from ASC 842-20-55-53. So this is what the FASB has disclosed as, this is if you do this quantitative disclosure requirements, you will be in compliance from a quantitative perspective on your first 10Q. This is the example that the FASB used as guidance for all preparers to adhere to. Next slide. And now I'll take it on to Carrie, who's going to give a demo. And Carrie, if you could just highlight the difference between the FASB's example and our disclosure reports, that'll be very critical for the audience. Thank you.
You're welcome, or thank you, Julio. So I'm going to get into the demo in just a minute, and what you're seeing on the left-hand side of the screen here is the Bramasol FASB report. So we took the example and now have used it to actually, I'm going to say, provide you with the ammunition to, for your disclosures, for your auditors. And I'm actually going to back up one, just for a second here. In the webinar, part of our description was the fact that not only are companies out there have been developing the solution for years, and not only are you and your company determining how you're going to do your quantitative and qualitative reporting, and not only are companies, service providers like Bramasol, preparing themselves to do your implementations, but auditors have been for years now being trained on how to go into your books, into your disclosures, and break them down and verify that you actually reported correctly. So what Bramasol has done is develop these disclosure reports, and then the drill to the detail within CLM, so that, again, when you do get audited, because I'm not going to say it's if, it will be when you do get audited, you're going to have all the backup information and data that you're going to need to validate your numbers. So with that, let me just go into the solution itself. So we're going to go into SAP and first, we'll just go take a look at the, Julio, I'm going to go into the maturity analysis report first and just show that, and then we'll go into the detailed FASB report.
So what Carrie's about to show you is really what I've been talking about, which is this is your basically commitments and contingencies schedule, where you will have to now show for the next 5 years what are your operating and finance lease cash commitments. Looks very similar to what you've been doing before, but we have created this report within SAP, and it actually works very well right now. Carrie?
Very good. Yes, again, we don't have the drill through on this report, but I just wanted to validate that we do have the maturity report for you. And now we're going to get into the detailed disclosure report. It's going to look very similar to what you saw, basically what you saw as the FASB requirement.
So what Bramasol has done, and I think this is the only one in the market right now, is we have actually taken the FASB requirement coming from ASC 842 directly, and we created our own report with the same exact quantitative line items from the ASC 842. And basically what it is, it's a one-stop shopping. You can basically refresh this report, cut and paste directly into your 10Q. If you do that, all that's remaining for your SEC reporting team is to talk about your lease portfolio, the qualitative requirements that we talked about. But if you have this report, copy paste into your 10Q, you are basically complied with ASC 842 quantitative requirements. Carrie?
Thank you, Julio. And as you can see, so we have all of the cost requirements on the the top portion. Well, I'm going to back up again. So we're talking about this as being one report. Basically, what Bramasol has done is taken I think it's the 14 reporting requirements, different line items within your FASB disclosures, and consolidated those into this single report. So I don't want to oversimplify what you're looking at here, because again, it's taking all of your requirements and summarizing them into a single report using the FASB example. And if you look
Carrie,
at,
if I could add
go
in
ahead.
there, every line item in other solutions we have seen, it's basically a separate report. So every line item for every period would be a separate report. What we have done nicely, and I really love this report, as you can tell, is we've created this for the financial reporting managers and the controllers in companies that can basically take this report and again, drop and drag into your 10Q reporting document, and you're basically done with your disclosures. So I think it's a really, really nice tool from my perspective, Carrie.
Thank you, Julio. And then we talked about the drill to and drill through. So let's take the short-term lease cost here of $322,000 in 2018, and then the $5,000 for 2017. I just double-click on the $322,000. Now it's taking me to, again, the back. This is in SAP, but it's taking me to all the contracts that make up those two numbers, the one for 2017, the $5,000, and then the $322,000 for 2018. Now, as you know, because it's an SAP, I can print this, I can export it to a PDF. And again, now you've got your backup data to support those numbers if you wanted to have a soft copy or hard copy at this point. Then the drill through. So if I go ahead and just select on the left-hand side here, a contract, it takes me right into CLM and the contract itself. So let's just go back. That was the short term. If I wanted to select one of the additional, so let's go on operating lease cost, same thing. Again, go ahead and select operating lease cost. And now I've got my interest amount, depreciation, and my lease cost and all the details provided.
So Carrie, can I just jump in here and say, so as a financial reporting guy myself, what's the first thing we do in our 10Q reports? We print it out and we have our reporting documents. But the next thing we have to do to support those documents is we have to print out all the supporting schedules. What you see on the screen here is exactly that. These are your supporting schedules that make up the numbers, and it's coming directly from your source data. That's the power of this report.
Right, so just think about your auditors come in, they want you to run the report, you run your disclosure report for the dates. Oh no, so I ran this report for at the December 31st year-end dates. You did not see that as far as one of the parameters I had, but we also have that quarterly, monthly, basically, the time periods that you need to run.
Right, and Carrie, just to point out, you can do this on a fiscal basis, a calendar basis. We give you a lot of flexibility in exactly how you need to run it based on how your company does your books, right?
Absolutely. So you have 445, 544, and then you can have the option, because not, you might have, certain business units that are working by organization, right? So you can have different calendars for different organizations, and we support that. Absolutely.
Yep.
Along with multi-currency. So if you wanted to run this report, take a look at your numbers with your group currency or the lease currency, that's built in, that functionality is built into the solution as well.
Mm-hmm.
All right. So with that, Julio, the next demo after Julio's going to cover a few more points is going through the validation reports.
Yeah, 1 second before we jump there, Julio, talk for a moment about one other feature. I love this report, and
Me too.
one of the things that I really like about it from an SAP perspective, but from anybody's perspective, is you have all the information in one place. So quite often, what you'll find is with other leasing solutions, you would have to look for example, the lease cost information or the operating lease cost from one report in one application if you're in a disconnected mode. But in an integrated situation like CLM, for example, you get all of your lease information out of CLM, but it pulls all of the information also out of ECC. So you have this aggregation of all the data. Talk for a second about how, I know you got really excited about that prospect, right?
So, I mean, John, I'll just give a real world example here. So we have a customer right now. We're working with them on this report, and they came to us a couple of weeks ago and says, we are running 45 different reports to come up with our 10Q disclosure. Can you help us? And we showed them this exact report, and they said, where have you been all my life? So from an accounting perspective, from the controller's point of view, from the SEC reporting person's point of view, this is a one-stop shop, and it just makes your validation process. I know we're going to talk about that in a little bit. This makes your validation process. But for me, from an accounting perspective, what's more important is, okay, sure, you have $310 million you're seeing on the screen there, but where's that number come from? You know, why is that number important? And the next question you're going to have from your executive team as well as your external auditors is, prove to me where that number is coming from. Where's the source data coming from? And the beauty about this report is you double click on that number and it takes you directly into SAP. You can drill as far as you want down. You can actually look at the payments in your procure to pay cycle. You can look at the valuation calculations. You can look at everything you need to validate that the numbers that you're proposing in your 10Q report is accurate. And that to me is the beauty of this report, is that you start at a very high level. We are proposing that you're going to disclose this in your 10Q, but we go a step further and we say, okay, how am I going to make this easier for the user to validate these numbers? And that takes us into the next step, which we're going to talk about shortly.
Right, and not only is it the value in a way, Julio, of the report itself, which is awesome, but the way this is set up using SAP CLM and the integrated approach to that, we can of course support third-party solutions, but the drill back capability into the transactions, in particular, you and I talked about things like IBRs and trying to diagnose why might my IBR, as I drill down into it, be different in different regions, and discovering that somebody, you know, quote unquote, fat fingered something as an introductory rate in a new office in Singapore, for example. The capability to drill down like this in an integrated SAP CLM solution is super powerful.
Yeah, so John, I know we're talking about disclosures today, but you know, these reports are really two-pronged. They serve two different audiences. This report is serving your accounting SEC reporting team, but there's also the operational finance team that's going to find this report very useful. Exactly what you said, John. These things can have sort of an analytical dashboard where you're looking at and comparing at the same time. Does this IBR make sense? And then the next question you're going to ask yourself is, should we be leasing an asset in Singapore? If I know my IBRs in the United States for the same type of building, same type of square footage is 4%, then why am I paying 9% in Singapore? So it leads to the question of helping companies also make operational finance decisions, which I think is absolutely as critical, or sometimes, depending on who you're talking to, more critical than the compliance aspect of this report. So it really serves two different audiences, and I think that's the beauty of this report as well, John.
Right. Okay. So let's get to the validation, because I know when we showed these reports to several of our prospects and partners, quote unquote, out there, one of the things they said is, this is a great report, John, Julio, Carrie, but prove it. Show me how this is going to work. So why don't we dive into that validation piece, because it's so important.
So we're going to now talk about, so Carrie just showed what we saw, you know, a great overview of the product. Just a couple more slides on the additional considerations as you go into your compliance function to disclosures. So if you're presenting your cash flow, you know, you have to basically, so you're going to have three different reporting schedules. On your balance sheet, you have to break out operating and financing leases. You cannot net the two of them together, unfortunately. On your liability side, you have to break out your operating lease liability as well as your financing lease liability. No netting is allowed. In finance leases, as we know, interest and amortization can be presented together, but only if that treatment is consistent throughout your organization. As we know, again, in operating leases, your lease expense is included in income from continuing operations. Next slide. So now we go to the cash flow. We know that principal payments of the lease liability for financing leases are financing activities. In the interest expenses and operating activity. This is consistent with topic 230, which is your statement of cash flows. And as we know, any payments for operating leases are classified as operating activity. And the same holds true for variable lease payments or short-term lease payments. As we spoke about earlier, variable lease payments are those payments where you have usage components in your base rate payments, as well as your short-term lease payments. If you have any leases less than 12 months, you're allowed to just disclose that, no capitalization necessary. Next slide. So we've talked a lot about theory. We've talked a lot about accounting guidance. What I wanted to do, and I think it's very powerful, is actually show what this looks like in real life. So Microsoft, the great company in Washington, they were one of the first early adopters of ASC 842. So they adopted the transition statement last year. So as you would see, the first thing they talk about, this is the actual Q1 10Q they did 12 months ago. So in the first piece of the disclosure here, you have the qualitative aspect. You talk about what type of leases you have data centers, you have corporate offices, R&D. It talks about your remaining lease terms, and it talks about short-term leases. Then we go into the quantitative disclosure requirements. So as you can see, compare that to our disclosure reports, the same thing is being disclosed. You have your operating lease cost, you have your finance lease cost broken out by amortization, broken out by interest on lease liability. You have your total finance lease cost. Then on the right side of the presentation, as we showed in our disclosure report, you have that piece of your cash flow. So you have to disclose what is the operating cash flow from operating leases, what is the operating cash flow from finance leases, and lastly, what is the financing cash flows from finance leases. Then we talked about what we talked about earlier, which is any exchanges or any other supplemental information. So you talk about the right of use asset exchanges. So Microsoft did have some exchanges, and as noted before, you do have to disclose that, and that's right there in the schedule. Then we go into supplemental balance sheet information, which is basically, so some companies will not disclose on their face of their financials the operating lease cost, because as we know, SEC rule says if the line item is less than 10% of your classified balance sheet, you can basically bury it in other assets. So because Microsoft is so large, they have not disclosed the operating lease impact on their balance sheet on the face of their financials. So they're disclosing it down here. So essentially, if you went to their financial statements right now, you would not see the operating lease asset on their balance sheet because the number is too small for their balance sheet. So what they've done as an alternative, and FASB is okay with this, they have disclosed the lease accounting impact on their balance sheet in the financial footnote, which is their note 15. Next slide. The same thing goes for where are these operating leases and finance leases in my liabilities? Well, because their liability number is so large, these operating current lease liabilities are small enough that it goes in the footnote, which is perfectly fine as well. The same thing goes for your finance leases. The guidance says if you are not disclosing these leases on your face of your financials, which is your core financials, your balance sheet, income statement, and cash flow, you can do the disclosure where it goes into here in the financial footnote. At the bottom of this screen, you see what we talked about before, which is the weighted average remaining lease term. So for Microsoft's case, the operating lease term, remaining lease term is 7 years, and their finance leases, which you would expect because they actually it's like a purchase, is 14 years. The last line items are your weighted average discount rates. So essentially, they're saying that they're operating leases, the weighted average discount rates across all portfolios, data centers, vehicles, buildings is 2.6%. And for their finance leases, it's 5.3%. So I wanted to really show the audience, this is the actual footnote. This is what you have to disclose going from theory to practice. Next slide. Now we're going to take it back to Carrie, where we're going to talk about, which is what I get excited about, because this is something that regardless of what system you use, you will have to prove to your auditors and everybody else in your company where the numbers are coming from. And we have created in Bramasol a set of 5 critical validation reports that will help you to do exactly that. Carrie?
Thank you, Julio. And as you can see, just like with the disclosure reports, you're going to have the ability with the validation reports to look at, again, all the detail and then be able to drill through into the contract themselves. Or as Julio had mentioned earlier, if you wanted to drill right into the financials, you could do that as well. So full, document flow, drill through, because these are just standard. We're using standard SAP functionality and standard SAP tables. So with that, let's go ahead and turn off my timer. Okay. So we'll go back into the solution. And instead of doing the validation or the disclosure reports, let's take a look at the detailed listing validation report. And as we've been doing throughout this webinar, Julio and I are going to tag team. He's walked the walk, so he can talk the talk a lot better than I can. We can get into the details. But you can look at the, the parameters, the filters that you have to work with based in this current demo environment. I already mentioned I'm going to run this on fiscal year, but there's other options that we've already built in as far as quarterly, monthly, year to date. If you wanted to include the payment details, you could do that, as well as, and I know Julio's going to jump in here in just a minute, your active, inactive contracts or all contracts. And then we've talked about whether to use, again, standard calendar, or if you have a fiscal 445 calendar, can certainly run on that as well. So go ahead, Julio, while I launch this.
Yeah, so the first report we have is what we call the active inactive contract report. Why is that important? So lease accounting is a moving process. Every month, every period, you're going to have leases coming in, new leases coming in, and then you're going to have leases being ended, terminated, casualties, so they're going to go inactive. But you have to show your auditors, or you have to show your executive team, show me what is being reported right now for your Q1, your Q2 disclosures. So that's going to hopefully make up all your active contracts. However, what they're also going to ask you is, well, show me what came off this quarter. So maybe I have 5 real estate leases that came off this quarter. This report is going to show you all the active contracts that make up that number. And again, it takes you right into SAP. You can double click as much granular detail as you so desire. Carrie?
Thank you, Julio. You see, I'm just scrolling through so you can see the level of detail. I did not select, well, actually, I guess I did. I've got the banking information there as well. And come back on over. I did want to go into this contract. So contract 20008. Go into it like we did before. And not only can you navigate through the detail report itself into the financial information, but as you know, within CLM, within the contract itself, I have the ability, to drill through as well. So if I wanted to look at those financials, again, think about your auditors coming in and saying, okay, let's validate these numbers, validate that was your cash flow and such, that, easily you can, supervised, obviously, allow them to get, right to the details, drilling through, in this case, right into the financial supporting what we just saw in our validation report.
And that's very important what Carrie mentioned, because I think a lot of us from the finance world, we would go to the system, print out the supporting documentation, give it to them, they look at it, they have a question, well, can you do it this way? Can I see it this way? The neat thing about this is that you can see it any way you like, and you can get down to as granular as you want to. As Carrie showed you, you can actually go into the valuation cash flow, which has all your amortization schedules, which is the crux of lease accounting. So you can review that, you can make sure it makes sense to you, and get very comfortable with what you're actually reporting.
And Julio, we have 4 minutes left,
Oh.
so I'm going to kind of quickly, I'm going to let you explain each of these reports in a short
very
manner.
Very quickly, we have another validation report, which is called our low value and short-term lease cost. As we know, some companies have decided to have low value lease costs built in. That's a disclosure requirement as well. So basically, you can have this report, you can double click on what have we decided. So some companies have decided to use the 5,000 IFRS requirement. Anything below 5,000 will not be capitalized, but you still have to know what is being captured. The same thing with short-term lease costs. Your auditors are going to ask you, well, let me see if I agree with you. Even though your lease says 12 months, it might be an evergreen lease. Therefore, it should be a 5-year lease. Therefore, it should be capitalized. So this is going to be the starting point of their sample population to validate whether they agree with your assertions or not. Next report, Carrie.
Yes.
Here we're going into the borrowing, the IBR validation report. Again, we talked about this. This is very important because there's bifurcation between asset class, lease term, as well as economic environment. You can basically double click on this report and you will see right in front of you, buildings. I have 6%, I have 3%, I have 7%. Hey, you know what? That 3% looks a bit odd. Why is it like that? So you have that functionality and you can double click into the contract number and see, why did we do 3%? What's the write-up? What's the documentation for that?
All right. And we're flying through these. And last report, just that we have 5 reports, but the least cost report covered 2 different requirements. But now, Julio, wrap up with.
The last one is, this is a very important one because this, again, the cash paid for leases should tie directly to your cash flow report on your financials. This report actually has what cash was paid by contract, by lease contract. And if you so desire, you can actually double click on the contract and look at the accounts payable postings, where the postings are coming from on a granular level detail. I keep saying the word granular level. We all know auditors love that word as well. They want to get down to the granular level detail to validate that what you are asserting is correct. And I think you have that flexibility of doing that within this tool.
All right.
Carrie?
So last slide is takeaways, Julio. I'll let you and John kind of wrap up on maybe 2 or 3 key takeaways. And then, John, I don't know if there was any questions that we can address quickly. So, Julio, what would you say, again, everybody that's companies that are watching this webinar, top 2
Yes.
takeaways from it? Yes.
Well, hopefully, the key takeaway here is we hope that every company on this call, especially a public company, has already done their lease assessment, has already done their lease accounting, and just are in the final stages of figuring out what can we disclose, where you're working on your 10Ks right now, doing your SAB 74 requirements, and then quickly thereafter, you're going into your 10Q reports, which is your first quarter takeaways transition. And as you can see, we have a nice, very comprehensive report that gives you one-stop shopping. Refresh the report, cut and paste into your 10Q. You basically have all your requirements you need. John?
Yeah, I think there are some key takeaways I got out of this, and you guys, I always love watching you two do this, whether it's on a customer meeting or just these webinars. It's fantastic. So thanks to both of you. I think number one takeaway I have that Julio, you hit on is beginning with the end in mind, as Covey would say, right? It's all about the disclosures. So really focusing in on a few things and thinking about the SEC and the lessons learned from RevRec. What we've seen from RevRec as we look at the many requests now on RevRec for restatement is, focus on controls. They are asking a lot of questions of companies of I've seen how you've done this and you've used spreadsheets, for example, but that's not controls. How are you controlling this? And then prove it to me. Show me your disclosure. Show me how they link back. The other one is around decisions. Julio, you highlighted that in the beginning. What decisions have you made and why? When we hear about RevRec on the other side about how have you decided to break out your revenues, disaggregate revenues. In the case of leasing, what were your decisions? How did you come about? What's an embedded lease, not an embedded lease? And then finally, of course, trying to avoid our favorite word, restatement of earnings. You really want to not have to do that. So that's from step one, and really paying attention to things like asset classes. Short term, what decisions did you make? And then your decisions about IBRs and how did you decide how to drill those together as well. The second one I think is the auditability. As we know, this is a new space, as Carrie highlighted early on. And what we found in talking to customers is this has made them much more comfortable with the whole audit process because they can, through a tool like CLM or even using third party using these tools, you can't drill back to the core, but we've created a process by which you can do validation. So it helps decrease your audit costs and increase the confidence of your auditors. Really thinking back, Julio, to the SOC requirements and the SOX requirements. So again, controls. And then finally, I'll note, while Julio does say these are out of the box, as anybody who works in SAP knows, there's no such thing as 100% out of the box. But what we have heard from customers is, oh my God, where were you a year ago? These reports get you really far down the road. They are tools that you can use not only for disclosures, but analytics, validation, and all of that. So hopefully everybody got a really, I apologize for the late start, but hopefully you got a lot out of this. I am really excited to hear from all of you. We've had a few questions on the line, mostly related to, how does this work in S/4HANA? Yes, it will work in S/4HANA. Can I work with third-party systems? Absolutely. Reach out to us. We would love to do a demo one-on-one with you. I encourage you to go on the website. This will be posted up as of Monday. And again, Carrie and Julio, thank you both for a fantastic job, and we look forward to seeing everybody on our next webinar in February. Have a great day, everyone.